So we can start.
Okay. Good evening, members. I welcome you all for the today's session on recent developments in GST refunds by CA Sarada Hariharan. I welcome you, madam. CA Sarada Hariharan is a practicing chartered accountant specializing in GST. She is a mom entrepreneur and co-founding partner of GGSH and Co. LLP. She started off her early career in KPMG audit and assurance, and also has the experience of handling key position in finance and taxation in large-scale industry. Currently, in her indirect tax practice, she is heading advisory, compliances, audit, litigations for various industries, including but not limited to marine exports, automobile, power sector, IT, air conditioning, HVAC, FMCG, real estate, leather export, hospitality, healthcare, etc. Her key experience is on GST refunds, FTP, and other benefits to large-scale exporters and handling litigations. She is a speaker on GST at various forums, including CA and CMA institutes, GST departments, various Chamber of Commerce, indirect tax professional forums, universities and colleges, and other professional and education institutions. She has also authored and reviewed the GST publications by IDTC of ICAI, Handbook on Interest, Late Fee and Penalties, practical FAQs on under GST, FAQ on supply and taxability, FAQ on ITC, background material on GST, etc. She actively writes articles on GST in the various professional newsletter publications, including ICAI. She is also a traveler and exploring the world. This is the brief introduction about CA Sarada Hariharan. Madam, I welcome for the session, madam, and I request you to go on the GST refunds, including you and a through a topic on refunds on SEZ units or developers or deemed exports. These are the specific areas the members are interested to know about, including all the other GST refund norms. Thank you, madam. Thank you very much.
Thank you, sir. Thank you for the kind introduction. Can you just take a pause for a minute? We have 100 participants, but I've been told we are expecting a little bit more. We wait for 1 or 2 more minutes before we start the session.
Yes, ma'am. Yeah, we can wait.
But I can see that the participants are rapidly increasing.
No, it is 105. Yeah.
They join gradually. We have close to 300.
Just 1 or 2 minutes we will wait before.
Yes, ma'am. Yes.
Sure. Almost like 20 additional participants have joined now.
Start. They will join.
We can start, right?
Yes.
Right. So good evening, everyone. Welcome for this session organized by SIRC. Thank you very much, sir, for the kind introduction, and my sincere thanks to SIRC for having me here. So before we get on to this discussion on recent developments in GST, I want to make it clear on two things. First point is, why do we have this session now, and the background in which we are going to discuss this. So why are we having this session right now? Probably, what are all the burning issues we can think of, like 30th November is the last date for, previous year conclusions when it comes to credit notes or debit notes or ITC and all that. And the other issue is like TRAN credit, again, we have 30th November as the last date. Probably December again is the last date for our GSTR 9 and 9. But these kind of matters can even be part of the discussion when we have these due dates coming up. But why are we even deliberating on refund related matters at this junction is something that we wanted to make. We all know what was happening a couple of days back in Gurgaon, where two chartered accountants were arrested, right? So without getting into the sanctity of the issue, if you look into what exactly is the issue that has happened there, it has got nothing to do with the credit or the filing or the due dates and all that. The entire issue is just about GST refund. Right now, let's not deliberate into what has happened, but what we need to understand is that as chartered accountants, though we do have professional opportunity when it comes to GST law, and of course, including the refund related matters, we obviously have another flip side to it when it comes to any kind of risky issues that are going to happen. So it is very important that we keep ourselves updated, because we cannot look at refund as a separate division. Even previously we had an attestation function in GSTR 9 and 9C. If you remember, there is a clause what talks about the erroneous refund, where the auditor is expected to attest even on the erroneous refund. It isn't that easy task, as much as what we look at it as a scope of GSTR 9C. Maybe it is good that the attestation has been removed. I do not look at it as a professional opportunity that has been taken away. Rather, it is also going to open up a lot of professional opportunities, because it's only the attestation that has been removed, but rather the compliance verification or the reconciliation still requires or demands a chartered accountant visit. So in this context, it is very important to keep ourselves updated when it comes to anything that is happening or revolving around the GST refunds. As long as you are doing any services, any professional services relating to GST, you cannot find refund related matters separate. Rather, it's an integral part of everything. So this is one important context for why we are even going to deliberate this topic today. Now, the second thing what I also want to insist upon is that it has been 5 years since GST law has been implemented. So we are still not going to deliberate on, what are all the type of refund and what is the procedure, how the refund has to be filed, and what is the provision relating to it, section 54, what says, and rule 89, rule 96. So that's not the way in which we can deliberate, at least given the fact that we have only 2 hours of time. So probably I'll be touching upon some of the basics, very, very fundamentals, just to bring you into the, because probably all of you would have been doing something or the other before joining at 4:30. So you would have been in a different world, and now just to bring you into the world of GST refund, I may give a very small introduction and brief, and after that we are going to get into all larger recent developments that has happened. So it is expected that you are knowing some of the fundamentals. If I'm going to discuss with you on what is the difference between with payment of duty and without payment of duty, then we may not be able to discuss on the recent development. So some of the fundamentals, I believe the members are already apprised with. And just another communication on behalf of SIRC is that, as you all would be knowing already, after the session ends, there is going to be an MCQ which you all are expected to fill up, and only then the CP will also happen. So with this, I'm also giving another reason for why you need to be attentive in this hours of session. Yes. So having given this as the background, let me share my slide. I hope the screen is visible for everyone.
Yes, ma'am.
Okay, wonderful. I've started getting Q&A even before starting the session. Can we take GST credit refund on export as client already availed duty drawback under the duty? Let me come to it. I will probably take up all the questions, a little later. Okay, let's get on to the session. I mean, that definitely shows a wonderful participation. Okay, so basic background on what is refund all about. Now, what is this instruction? Why am I touching upon this? Even before talking about the fundamentals of GST, what are the types of GST? There is one instruction which has been circulated, which is within the department. Okay, not a circular, but an instruction for the internally for the department. I'm not sure if this has been read by all, but I want to bring this to the attention of each one of you because that is also going to lay down an importance for why we are going to discuss this. This instruction, which was given in June 2022, it talks about the urge for the department to conduct post audit for refund related matters. Okay. So obviously, the department officers have got, the commissioner has got the power to go on an appeal against their own audit itself, right? So because when there is a case of erroneous refund, they can even go for an appeal against that audit. Now, this as the background, this particular instruction states that just like how it has been seen, if you go back to 2017-18, initially for the first 1 year, it was a very big struggle for every exporter or SEZ or service exporter, whomever you take. It was a big challenge for them to get the refund. That the whole situation was there predominantly until 2018 March. But ever since that Circular 37 was issued in 2018, March 15th March 2018, the entire refund has been expedited. And again, when the Master Circular 125 was issued, again the refund related matters have been expedited. In fact, in one of the circular, it has been communicated to the department officials that they need to dispose of any refund matter within 45 days because 60 days is the time limit as per the GST law. So please make sure that everything is processed within 45 days. Otherwise, the government will end up paying interest. Of course, they don't pay the interest, it's a different matter. But this has been an internal circular, and if you have seen in the last 3 years, all refunds have been disposed of very fast. It has been enormously quick, especially when you are getting it through customs as well. But having said that, everything has a flip side to it, right? So as much as we are getting all the refunds in a very fast pace, it has a flip side to it that government had given originally the instruction in Circular 17/17 that even though pre-audit is there as part of the system, pre-audit of refund order is not required to be carried out, but post-audit of the refund orders may, however, continue to happen. In this recent instruction, which is there in June 2022, a lot of post audits have been, after this instruction, a lot of post audits have been initiated. So departments have started issuing show cause notice. Already we are getting show cause notices for a lot of matters. And of course, for audit under Section 65 is also happening. Inspection under Section 67 is also happening. Enormous amount of intimations, show cause notice, audits, inspection, everything is happening in this year 2022, and you can expect it more as we march towards 2023. And as part of this, we are also facing tremendous amount of notices and intimations due to refund matters. I'm not saying every case fall under erroneous refund, but then wherever the department has any slightest doubt or possibility of erroneous refund, they are immediately flagging this issue, and that is happening largely in 2022 in these recent couple of months. So what they are saying is this is with the objective of ensuring uniformity in the procedure and also for enabling effective monitoring of the sanctioning of refund. This is not only a challenge that is faced by the taxpayers, in fact, this is equally a challenge that is faced by the department officials as well, because as we discussed, they are saying all these years we have been pressurized to dispose of all the refund matters in a very urgent basis, because to keep all these things in line with the the ease of doing business objective of the government. But right now we are subject to scrutiny of whatever we have been sanctioned already. Probably we could have been given a little bit larger time for us to scrutinize it better so that we don't end up in this kind of situation. Because as much as taxpayers are suffering the interest impact, even the department officials are held responsible for any kind of error that happens in the refund related. Because the recovery is a challenge. And again, this is like a government money which is going out of them, and then they have to struggle in getting it recovered. Now, one more aspect which we have to understand is the differentiation between refund and rebate and incentive. These are three different things. Okay, refund is predominantly aligned with rebate. Okay, but incentive, export incentive is something different. The foreign trade policy talks about incentive as well as about these rebates and refunds. So the point here is, when you talk about incentive, you are being incentivized for doing something. That's how the foreign trade policy looks, which means you bring foreign currency to India by doing export. You are being, let's say, 1% or 2% on the FOB as an incentive. This incentive can be in the form of duty drawback or in the form of MEAs and ACS in the past, and then the already these kind of things are incentives. But when it comes to refund, it is not an incentive. It's not that the government is trying to give you something, but rather the government is only trying to give you refund of what was already borne by you. Which means to say, if you have already incurred, you have already paid something to the government, which is what you are trying to now collect it back from the government. So you have already paid the money, and then you are getting it back now in the form of refund. Okay. So this is something that we have to be clear about. Now, having said this part, still it is having refund. Still, the government is looked as a major risk. Why is it? Because you are just already you have paid it to the government, and still you are trying to get it as a refund. Now, why is it still an issue? Because of all these fake invoicing that is happening. So what happens? Let's not deviate from the topic, but just to reiterate on the importance of this refund. Fake invoicing is becoming a larger issue, countrywide, because in fact, most of the amendments and most of the stringent regulations that we are having today is mainly because of this fake invoicing related issues. Now, what is happening here is that A is issuing an invoice to B, and B is availing the credit on this invoice, and B is taking refund of this money to the government, from the government. But the problem here is A is raising this invoice and then passing on the credit to B without paying the tax to the government. So this is exactly where the revenue leakage is happening. Probably this revenue leakage is just say 1% of the entire revenue which government is talking about. Currently, the monthly collection is almost around 1.5 lakhs of crore. Still, there is a very 1% of revenue leakage is happening, which is what is tried to be arrested. And for this purpose, a lot of issues are happening for the remaining 99% of genuine taxpayers. But all these issues predominantly revolves around. So that's exactly where the government's actual fund is being passed on to somebody, which could be in the form of bonus. Now, on these lines, the other important instruction which was passed on in this June 2022 instruction is that speaking order has to be passed by the officials when it comes to refund. But I'm pretty much sure speaking orders are not available in most of the cases. I have been handling refunds for the past 5 years. So many refunds we have handled with so many departments, so many states, multiple types of industries, but hardly we come across speaking orders. But we have to be happy at least if show cause notice of the deficiency is in the form of a speaking document. Because most of the time, even that is not a speaking document. We receive a deficiency, almost in deficiency of document. What is the deficiency that is also not being clearly spelled out? And again, show cause notice is being received with some matters which is not again clear, rejected because of inadmissible ITC. Now, what is that inadmissible? That is also not again clearly spelled out. The problem here is speaking orders are not being passed, but when I say speaking orders are not being passed, this naturally, you have a very good case if you are going to take this on an appeal. To first of all, say that the speaking order has not been passed, but let me tell you the ground reality. If you are going to go on an appeal just because the speaking order has not been passed, what really happens is that the commissioner is again going to redirect this matter to the adjudicating authority to say that you please pass a speaking order, re-evaluate the matter and then pass a speaking order. This is what is happening. Even though GST provision does not contain any specific provision for remanding the case back to the lower official, it is still happening on a practical scenario. Okay. Now, the point here is speaking orders are supposed to be passed by the officials. Wherever the speaking order has not been passed, rather, wherever the speaking show cause notice in the deficiency movement has not been issued, you can always point out this matter as the first thing in your response. Okay. And having touched upon some of these critical aspects of why we are even discussing this right now, let me give you a touch on the fundamentals. As I said, what are all the types of refund that are there? Refund in the case of export, supplies, SEZ unit, deemed export, of course, export of goods and service, goods or services or both. Again, the goods or services export can happen with payment of duty or without payment of duty. And then deemed export, again, the refund can be claimed either by the supplier or by the recipient. And then refund of taxes on purchases made by UN or embassies, refund arising on account of judgment of the appellate authority, tribunal, or any other court. This is again another pain which we are facing in the recent days with the increasing litigations. Refund of accumulated income tax credit. This is something that we are going to deliberate in detail, where on account of inverted duty structure. Refund of pre-deposit wherever it has been made by a casual taxable person or a non-resident taxable person, where it is a temporary registration. Excess payment made due to mistake. This is another challenge, not only for the taxpayers, but even for the department officials. How do they even ascertain that there is an excess payment that has been made? How do I, let's say even there is a mistake for which we have paid, but how do I ensure that it is only a mistake? You don't have an otherwise any liability. So this is actually a challenge for the department officials to ensure. And again, whenever it is a challenge for the department officials, the onus is on the taxpayers to prove the genuineness of these things. Refund, refunds to international tourists, and then refund on account of tax paid on advances. This is another challenge. How are you going to substantiate that this is only an advance on which you don't have a subsequent liability to offset? On account of CGST and SGST, where the place of supply has been erroneously made, that is the refund under Section 77. Although refund is prescribed under Section 77, the problem here is the fund flow issue. Wherever there is a mistake in the place of supply, at least as far as the domestic, within India transactions are concerned, if you have paid IGST instead of CGST and SGST or vice versa, you have to pay the correct tax liability, and then you have to go for the refund of the wrong tax which has been already paid. But this is going to pose an issue when it comes to the refund claim, because you need to substantiate, and again, until then, you are going to have a cash flow issue. And refund of balance in electronic cash ledger. As much as it sounds very simple, any balance in the cash ledger, you can get it as refund, but practically, again, the department officials have been instructed to scrutinize it, to evaluate, do they have any liability which is outstanding before you sanction this refund. But how can one ascertain whether they have a liability or not? Because if I have to see for a taxpayer whether he is having a liability, literally I have to look at the entire audit has to be carried out. If I have to say there is no liability pending for him, unless and otherwise I'm going to scrutinize this entire, outward RC, inward, everything for the last 5 years, it is practically not possible for the officers to say that there is no liability which is outstanding. So there are, though the entire focus of refund is on export or SEZ or deemed export and, the inverted duty structure, the other miscellaneous categories like, the excess payment or this wrong place of supply or balance in electronic cash, these are the matters where, because it doesn't fall within a parameter. When you talk about export, at least, you know that you are just supposed to scrutinize this export invoices, and then there is a credit for the month, and the credit has to be verified, Annexure B has to be compared to A, and then once the credits are all being reflected, and then you know the genuineness of this export of goods by way of verifying the EGM and ICAI and all those stuff. No, it's confined for a period. So there is a protocol or there is a procedure which is being followed, and then once the procedure has been satisfied, it becomes easy for the officers to sanction the refund. And because of this reason, it is probably a little easier for even the taxpayers to get this. Of course, challenges are there, but predominantly by and large, it is settled now. But the challenge is even higher when it comes to all these kind of exceptional transactions. As I said, like excess payment made. Okay, so yes, I do agree it is an excess payment, but how do I know that there is no other deficit of payment which is outstanding? So these are all the challenges which we are practically seeing. So broadly, this is what one has to go through when it comes to the refund related provision. Section 54 to 58, and then the refund related rules and notifications, all the amendments. Circulars plays a very, very important role when it comes to refunds, because refund is ultimately a benefit, or rather something that the government is trying to give it to you. Most of the favorable matters comes only through the circulars. Okay, so circulars play a very important role when it comes to refunds. In fact, if you see the last 5 years, most of the circulars, or rather the lengthy circulars, are all relating to refund related matters. Okay, so we will deliberate on some of the practical issues as well. Okay, so though these are all the provisions which are governing refund, if one has to really understand or process a refund, or one has to apply for refund, if one has to deliberate on any kind of erroneous refund, or if a professional has to handle a case relating to refund, parent or appeal or anything for that matter, it is not sufficient if you understand the refund related provisions, but rather you need to understand the entire law, because whatever you are going to do under refund, this is more of a procedure. It's for the purpose of refund. You can handle other matters without touching upon this refund related provisions, but if you are going to handle anything on refund, it is not sufficient if you go through these provisions, but you need to have a larger understanding of entire ambit of GST. So time limit, we'll start with some of the issues now. Time limit, have a couple of points. We have some recent favorable matters. See, in fact, before we, as much as we are going to discuss on the issues, what I have seen, especially in this July to I would say July to October period, especially in July we had enormous number of notifications and circulars, almost like 10 notifications, 10 circulars, everything has been issued, rate changes have happened, everything has happened. But if you see under refund, most of them are taxpayer friendly amendments. Most of them are taxpayer friendly amendments that has happened. So it's even more important for us to understand what are these benefits, which so that we don't miss out on these benefits as well. So relevant date is a very important terminology, because always you have a time limit when it comes to application of refund. That time limit under GST law is 2 years from the relevant date, and this relevant date would differ from case to case. For export of goods, again, whether you do it by sea or land or coast, you have different dates. Predominantly, let's assume if it is happening by sea or air, it is based on the date on which the ship or aircraft in which such goods are loaded leaves India. The important point here is it's not when it is loaded. Okay, so it is not sufficient if you look into the let export date. You may also be probably looking into the ECM date, or probably you have to look into the mate receipt as well. Okay, those of you who have handled anything under customs, you will be knowing that there is a document called as mate receipt, which will be given by the liner. Okay, so these are some of the documents through which you can ascertain what is the relevant date. Okay, and then when it comes to the deemed export, the date on which the return relating to such deemed export is furnished. Again, when we talk about this return, in the case of wherever the tax has been paid, there is a circular also which has been given that this shall be based on the date on which the return is furnished by the supplier, because tax liability is paid by the supplier in that case. So obviously, whether the recipient is claiming the refund or the supplier is claiming the refund, ultimately the tax liability is paid by the supplier. So the tax payment of the refund is relating to that component which is paid by the supplier. And what is relevant here is the return that is filed by the supplier, not the return that is filed by the recipient. So that is a clarification which has been given. Probably I have a slide on this at a later point of time. And then the relevant date when it comes to services, it is based on the receipt of payment in Forex or INR, wherever it is permitted by RBI, or issue of invoice, whichever is later. Because for you to get the export of refund, you should have both in raising of the invoice should have happened, as well as the money should have been received. So sometimes it is advance and then invoice, and sometimes it is invoice and then the collection of money. So the criteria here for application of refund is that both should have been done, and hence the time limit gets calculated only when both of these are happening. And when it comes to judgment or any kind of court order, it is based on the date on which it has been communicated. And when it comes to the inverted duty structure, it is the due date for furnishing the return under section 13, which means GSTR PB, for the period in which such claim arises. Wherever tax has been provisionally paid, it is based on the date of adjustment of the tax after the final assessment. And then in case of persons other than the supplier, it is the date of receipt of goods, and any other cases, date of payment of tax. Now, very important taxpayer-friendly amendment is that this period of 2 years has been now extended to 4 years because of the 2 years of COVID. This COVID is like, Atipattu Gramam வந்து இந்திய வரைபடம்ல இருந்து காணாம போன மாதிரி this 2 years has completely vanished, from the records of so people. Probably it remains as a, bad or good memories in the mind of many. But having said that, the law recognizes the inability or the practical difficulties which are faced by the taxpayers, and hence this has opened up a larger scope, because as we are discussing today, we are right now in November 2022. Because of this extended period of time, you can apply for refund even when it is relating to November 2018. The relevant period, here is pertaining to November 2018 and not November 2020. So already you have 2 years, and additionally you are also getting 2 years, because this period starting from March 2020 to 28th February 2022, the 2 years has been completely removed for the purpose of calculation of this 2 years limitation. Now, having said that, you should also understand that there is a flip side to it. Nothing comes free of cost, right? So as much as the law recognizes the taxpayers are having difficulties, the law is equally recognizing that even the department officials are also having difficulties during that phase, and hence you remove this for any kind of time computation. It comes to the department officials as well. Naturally, when the taxpayers themselves are going to get this benefit, why not the department officials? That's the way government would probably look into it. So this period of is excluded even for recovery of erroneous refund related issues while passing orders under section 73. Okay, so section 73 is giving a time period of 3 years from the date of erroneous refund, and now this 3 years is further extended to another 2 years, and hence probably in your case you are having time starting from November 2018. But in the case of department officials, right now they are having time even from November 2017. And for that matter, I don't remember any order that has been passed until November 2017. Probably a lot of even refund applications were not being filed because even the taxpayers were not clear on how to apply the refund. And most of these were being prohibited because of the duty drawback issue as well. That has been again clarified only when the circular came out in March 2018. So hardly any refund would have been sanctioned until November 2017. So as long as you get any notice or intimation relating to erroneous refund, you don't, at this point of time, you don't even need to get into the time limitation. Blindly, you can be rest assured that it falls within the time limit, and hence it may not be time bar notice. Now, the other point which we also have to understand is that even, keeping aside the refund related matters, even for regular assessment to happen under section 73 also, the time limit as far as financial year 17-18 is concerned, that has been extended until September 2023. So until next year, September 2023, don't even worry if any notice under GST is time barred or not. Nothing is time barred. Everything is valid. So the next issue that we are going to discuss is on this time limit when it comes to the deficiency memo. Okay. So when it comes to the deficiency memo, the period starting from the date on which you have applied for the refund until the date on which you have received the deficiency memo, that gets excluded. The problem here is, let's say, for example, you are making an application today, let's say, November 25th, for the period relating to November 2018. Okay, now that you have understood that, no, you can even apply for November 2018, you go ahead and apply, make the application. And then you receive a deficiency memo. What happens for the deficiency memo? You have time, probably in the first week of December, you are going to receive a deficiency memo. What happens when you are receiving a deficiency memo? You have to make a fresh application. In December, when you make a fresh application, the department officials were rejecting because they said, your time limit has lapsed in November. But now you go on to say that I originally applied in November, which is well within the time limit. Now only, the time has, it is December. So I should still be given a benefit. But you can also go and make this application in January as well, right? When it comes to the deficiency, you don't have the time limit to make the fresh application. So what happens here is that this time, starting from the date on which you have made the application till the date on which you have received the deficiency memo, that gets excluded. which means, let's say, for example, you receive the deficiency memo on 2nd of December. So 1 week has elapsed, right? So again, you get that remaining 5 days of time. Right now, we are on 25th of November. So I still have 5 more days left in my hand, right? I can make the application within 30th November. The same 5 days, I'm again going to get from that 2nd December on which I received the deficiency memo, because it's as good as 25th November. This has been made by way of a notification amendment. There are a couple of amendments which has happened under in this Finance Act 2022, which are very much pertinent and relevant when it comes to refund. There are 3 amendments. One is, let me go in the reverse order. One is, we discussed on this relevant date related matters. I said under each and every category, right? But if you have noticed, SEZ related relevant time was missing. So that has been amended now. The relevant date when it comes to SEZ is that SEZ supply is that the due date for furnishing GSTR 3B under section 39 in respect of such supply. So this is one amendment which has come out. Again, as I said, I'm going in the reverse. For this UN embassy consulate related refunds, 6 months has been given as a time limit, but then this 6 months has been time and again extended by way of notifications, and then they were making it into 18 months, that is 1.5 years. Now, to ensure uniformity in line with other refund categories, they have made this also as 2 years. So even they are also having 2 years again as against that 1.5 years which they were having. And even the COVID related reliefs are as well, applicable for them. Now, what is this first point that I am having? There is a retrospective amendment that has happened under section 50 on interest. Now, how is this relevant under this? When it comes to interest, there are a couple of retrospective amendments that has happened. Retrospective amendment being taxpayer friendly amendment, retrospective effect from 1st July 2017. Now, what are they? Point number 1, interest is going to be only on net tax liability and not on the gross tax liability, which means whatever you pay by cash in colloquial terms. Again, it has, if you have to read section 50, it doesn't really, section 50 subsection 1, it doesn't really contemplate that way. There are a lot of exceptions to this. Let's say you pay by DRC03 using ITC, you still have to pay interest. Okay. So I am not getting into the issues relating to this, amendment, but having said that, we need to understand that interest is payable only on net tax liability and not on the gross tax liability. And again, interest is not applicable when it comes to ITC availed but not utilized. This again has been clearly now explained by way of by inserting rule 88B, where what do I say when I say utilization? Extent of utilization, date of utilization. These 2 terminologies have been clarified. Okay, and again, that has its own set of issues on how it happens in exception. But having said that, by and large, we have settled down that interest is not applicable as long as you have only availed the ITC and then you are reversing without utilization. Okay, which means you have to see what was the credit balance. If the credit balance has fallen down over and above, fallen down below the value which you have erroneously availed, then it means you have utilized to that extent. Okay. And the next aspect which has been clarified is that the interest is only at 18% and nothing called as 24%. Let's make it amply clear. Whether it is for excess payment, whether it is for short payment of tax liability or excess availment of ITC, or whether it is relating to erroneous refund, anything for the, because I'm still receiving notices with 24% calculation. Let's make it very clear, it is only 18%. With retrospective, all these are retrospective effect from 1st July 2017. Now, what happens is these kind of clarifications have been developed over a period of time for all these 5 years. Finally, these matters have been, the last notification with regard has come on 5th July 2017. Sorry, 5th July 2022, which is like 5 years and 5 days after implementation of GST law. What happens to those cases where you have paid excess interest in the past, especially when it comes to 17-18? I'm sure many of the taxpayers might not even have paid interest, but that's one part of the story. But there is another part, there is another sector where they try to be over conscious, or they don't want to take any kind of risk or chances, or maybe they would have paid interest on the gross tax liability, or interest might have been paid at 24%, interest might have been paid on ITC, even if they have not utilized. These kind of errors where excess payment of interest might have happened. Now, the biggest question here is, can I get refund of these excess payment of interest? The answer to it, we have to find it. It has not been clarified because the government may not want to explicitly come and say, no, those who have paid in excess, come and get the refund. Now we are opening the Pandora box. No, that's not the way government is going to tell us. So we need to identify where we have this is like what we say, Adara Kodandikam Pal. Okay, so like that, the taxpayer should identify if they have paid anything in excess, and they need to figure out wherever the excess interest has been paid, they have to go and apply for the refund. But the question here is whether the department is going to entertain this. Having said that, there is no circular or anything which has made it explicit that you can go and get the refund. How a professional or a taxpayer can handle this matter? Let me put it in. One is, if you see, there are a couple of other amendments also which has happened even through this Finance Act 2022, or amendments which has happened in 2021. Similar amendments are there in previous budget amendments as well. But if you see these kind of amendments, let's not get into this, but this is more on a rate-related clarification which has been given. But there is a clause which I have highlighted in red. If you read that, no refund shall be made of all such taxes which has been collected, but which would not have been so collected had subsection 1 been in force at all material times. So there is an explicit provision which says that no, you cannot get the refund, even though it is a retrospective amendment with effect on 1st July 2017 also. They have made it very clear that no refund shall be entertained if you have already paid any excess tax. But if you see, there is no such explicit provision when it comes to all these amendments which has happened under section 50 for interest. So which means the government is indirectly saying that you are going to get refund, but though they don't want to explicitly say it out. Now, the other aspect which you also have to refer to is the Gujarat High Court decision in the case of Cosmol Energy. We all may be knowing this Mohit Mineral case because these days case laws are popular when that is largely being circulated in all the WhatsApp groups. So Mohit Mineral is one such case which has been largely circulated in the WhatsApp group. Okay, so it is a famous case on this ocean freight related issue, right? So whether ocean freight is to be paid under RCM or not when it comes to import of goods under CIF basis. So the matter has been settled. Initially in the Gujarat High Court itself, it was a favorable decision, and then the same has been upheld in the Supreme Court. And now, very recently, 2 days back, the central government has also issued a very clear instruction that they are not going for the revision petition against this Supreme Court decision, which means the matter has attained finality. Okay. Now, there is another case also based on this Mohit Mineral decision in High Court level itself, wherein this Cosmol Energy Private Limited, they have applied for claim of refund since they have already paid this ocean freight. They applied for refund of all that they have paid. But then the department rejected that refund on the grounds of time limitation. They said, it's time bar, 2 years have already passed, so you cannot get this. Okay. So what this is a very, very important and very interesting, beautiful judgment. What Gujarat High Court says is that this is first of all not governed by Section 54. In fact, to put it as a matter of point, this is not even within the GST law. Okay. Article 265 of the Constitution provides that no tax shall be levied or collected except by authority of law. Since the amount of IGST is collected by the central government is without authority of law, the respondent is obliged to refund the amount erroneously collected. This is not even a tax, not even an interest. This is just an amount that is paid erroneously, where the government has also collected without having an authority of law, without having a power to levy the tax. Because the entire provision is now, ultra vires the Constitution. Correct? So, ultra vires the Act at least. Now, further it is observed that Section 54 is applicable only when it is relating to claim of refund for the tax paid under GST Act, whereas the government has collected it without authority of law, and hence it is not even a tax collected by them, and hence Section 54 itself is not applicable. So naturally, when Section 54 is not applicable, the time period as prescribed in Section 54, that is the 2 years from the relevant date itself, is not applicable. Then what is applicable? How do you determine the time limitation? Then you have to go to Limitation Act. Even in the Limitation Act, you need to understand that though we call this the limitation law prescribes 3 years of time, from when it has to be calculated. For that, you need to refer to section 17 subsection 1, wherein the appropriate provision for claiming refund of amount paid to the amount paid to the government is under the category of mistake of law. When it comes to mistake of law, the time gets calculated only from the day on which the law has been ratified. So when it comes to all these interest related matters, then even though, probably the council would have given in principle approval, or the council would have given recommendation, or the act would have been, might be there, even in the proposed amendment of the Finance Act, all these you keep it aside. Ultimately, what is the notification on which this amendment has been enacted into the law with retrospective effect? If you see in the case of this interest on ITC related matters, is only on 5th July 2022. So that is the time from which your time period has to get calculated. So let's make it very clear that as of now, even if you have paid any excess interest, I'm sure many of you might have paid excess interest. If all that you need to do is just go back and scrutinize what you have done at this point of time. If you have a proper interest computation in your hand, which has been paid through your return or DF03, whatever it is, especially in fact, I would urge you to scrutinize all those interests wherever you have made your clients pay at the time of filing GSTR 9 and 9C for 78. That is also quite possible. Because I've seen a lot of people creating clarity, trying to create a clarity that it is only 24% when it comes to ITC. Okay. So let's make it very clear that it is only 18%. Okay. No ITC, no interest on ITC reversal unless it has been reversed. So with all these, the background, wherever any excess interest has been paid, please make a scrutiny of it and then make an application. So the next point here is there is an amendment in Rule 4243. Why is it relevant when it comes to this? We are talking about refund, right? 4243 is about the proportionate reversal of ITC when you are having taxable supply as well as exempted supply. So I hope you are all familiar with Rule 4243, but just to give you a background, wherever the taxpayer is having exempted supply as well as taxable supply, you need to make a proportionate reversal of common ITC. Okay. But the problem here is exporters have been refund is something that is by and large applicable for exporters, right? So if you are dealing with refund, as I already said, you need to be familiar or clear with all the provisions related to the law, and especially when it comes to export, you need to be all the more clear on all the provisions that is related to export. This is one such amendment. So what happens for exporters is that they are being given duty credit script in the form of SEIS or MES or authority. Initially, when the law was being introduced in July 2017, all these scripts were being taxed at the rate of 12%, and then they have reduced this to 5% as they are doing a favor for the taxpayer. The point here is this is not a supply. This is an incentive. This is as good as a duty drawback, but just like you pay the duty drawback as a direct cash into their bank account, but when it comes to this duty credit script, you are giving it as a script, and then they have to exchange the script if they don't have the import. Now, this credit script cannot be taxed because this is a benefit which has been. You cannot levy tax on the benefit. Then they have made it exempted. The problem here is they should have made it. They should have brought it under Schedule 3. But wrongly they have given it under notification 12/2017. And hence what happens here is it takes the color of exempted supply, and then you are being asked to reverse the ITC proportionately. In fact, there is a larger issue here. Rule 42/43 prescribes the reversal of ITC, which is only a common credit. The department goes to the extent of understanding that you are an exporter. Whatever ITC that you are incurring is all relating to export. Only because you are doing export, you are getting this duty credit script. So whatever is your ITC relating to export is a common credit for export of goods or services as well as for this credit script, because this credit script you not have received if not for your export. They go on to take these kind of interpretations. I have a couple of matters like this pending with the appeal. But having said all that, right now this is a taxpayer-friendly amendment, wherein they have made it very clear that this duty credit script, just like how you don't need to factor interest as part of your Rule 42-43 reversal, even duty credit script need not be factored. But the point which is still left open here is this is inserted by way of an amendment in the explanation. There are again two ways of interpreting. When it comes to amendment of an explanation, explanation is something which is more in the nature of clarificatory, wherein the act is trying to explain what is given in a particular provision. If it is inserted by way of an explanation, there are some case laws which says in the past regime that it tantamounts to retrospective amendment, because that is how it should have been read at any point of time, because you are trying to explain something. Okay, that's just like how circulars are being given. We have to see what is going to be the fate of this particular amendment, because there are a lot of exporters who have this issue, who have been demanded the credit reversal on their entire ITC. Just imagine if they are going to reverse 2% almost of their ITC. What is the fate? So these issues are definitely there. Okay. But having said that, at least now that they have given an amendment to say that at least going forward, you don't need to reverse Rule 42-43 when it comes to duty credit. The next amendment which has happened recently is on this refund. See, I'm not reading this, but let me explain you what happens here is, first, you're making an application of ITC. Accumulated ITC, whether it is for export or for SEZ supply or for inverted duty structure, whatever it is. Under section 54, subsection 3, you are making an application of a refund of ITC. First, you are going to debit your electronic credit ledger. Already you had a credit in your ledger. Against that credit, you are going to debit it, and then you are applying for the refund. After the refund gets sanctioned, you are going to get this money into your bank account. After a point of time, at a later point of time, either by your own identification or having been called upon by the department officials, there is a common conclusion that an error has happened in the refund sanctioning process. This error can be in the form of error in availing the ITC itself, or the ITC is properly being availed, but probably an excess, refund only. Now, whatever you have already received in the form of cash, you are going to repay it now again in the form of cash. So, what was received in the form of cash erroneously has been repaid in the form of cash. Now, what was originally debited from the electronic credit ledger, it has to be recredited, isn't it? It's a simple logic. You originally debited to make this application, which is what you converted into cash in your bank. So now that you are repaying it back, or naturally you have to get back the credit, right? But the problem here is this was not clearly spelled out in the law, or probably the officer have not understood it. Then the matter had to go up to the Gujarat High Court. This amendment, which has happened in this July 22, is as a result of a very recent case decision in the Gujarat High Court in the case of ITEC Plast in April 22. Okay. So, in fact, this is a very interesting judgment. If you read, I'm just reading the one which is there in italics. Here, the simple issue is one of restoration of the ITC, which was erroneously refunded and subsequently recovered. If the authorities have accepted that there was an error and resultantly accepted repayment of the erroneous refund, as a corollary, the credit of the ITC must be restored. It cannot be that for the purpose of repayment there was an error, and for the purpose of restoration of the ITC there was no error. So it's like, that's exactly how it is being projected. There is no question of any refund of ITC. It was not a question of refund of ITC. The question is one of restoration of the ITC. Refund is different from restoration. Restoration of the ITC in the electronic credit ledger and not a refund thereof. Hence, any reference to 9610 is completely misconceived and not relevant to the law. This is a very interesting judgment, because of which we had this amendment. Now that it is being made very clear that it can be, it will be recredited, and the applicable form is Form PMT03A. You need to submit a letter for the department officers to make an order, pass an order under Form PMT03A. And if you are making this erroneous refund now, because having said that, a lot of refund related past matters are being scrutinized, and then you happen to pay something in the form of erroneous refund, there is a recent circular which says how you need to make the repayment so that you get an easy way of this recredit. So the circular clarifies that the taxpayer shall clearly mention the DRC 03 as deposit of erroneous refund. See, most of the time, whenever you have to get any kind of refund or recredit out of this DRC03, the issue, what happens is there is a remark which has to be given in the DRC03. That has to be very clearly given. If the remark is not clear, it becomes very challenging for even the department officers to understand what for this is being paid. When you say it is paid in excess or you have paid as an erroneous refund, you give me the recredit, all these things, the remark has to be very clear. You have to clearly mention that it is deposit of erroneous refund. And then a new annexure A has also been introduced, which you have to upload along with this DRC A. And based on that, you have to make a separate application till such automated facility is made available in the portal. You have to write a letter asking the officer to pass PMT 03A for this, recredit to be sanctioned. Okay. Now, the point here is, please do go back and reevaluate. What am I trying to insist upon here is, having understood all these things in terms of amendments and things that has happened, is go back. I am sure there were a lot of rejections which has taken place, especially in 2017-18 and 18-19, wherein the rejection and recredit itself has not been automated. Forget about this erroneous refund which has been repaid. Even for a normal rejection, see, the procedure is in such a way that if there is any component of refund that gets rejected in RFD 06, immediately it has to be recredited. But all these have been automated only after Circular 125 has been given in 2019. But prior to this, I'm sure there would have been some or other rejections that have happened. But when these kind of rejections happens, please do get a recredit of it. But having obtained the recredit, what is also important is evaluate if this rejection is a mere rejection of refund where your ITC is otherwise eligible. Let's say, it is capital goods in the case of export without payment of tax. You cannot take the refund, but you are eligible to avail the ITC. But having said that, if the ITC itself is ineligible, even if you are going to get the recredit, you still have to reverse the ITC. Okay, so we need to understand what is the cause of rejection. We need to understand what is the cause of this erroneous refund which has been sanctioned. And having understood that, we need to evaluate whatever said and done, it is better to get the recredit. And after that, you can decide if it has to be repaid or not. Okay, but if you have to get the recredit, please evaluate and immediately pay it back so that at least there is a squaring off which happens. So that the ITC which has been recredited has not been utilized before payment of this tax liability. And then thus you are going to save on the interest component as well. Because I'm handling these kind of matters as part of, even the department audits under section 65. What happens, let me share my practical experiences, because I believe these kind of practical experiences would be much more benefit for the professionals. What happens is, as part of audit, some, ITC reversal has been identified. Let's say it is an ineligible credit. Okay. Now, what has happened in those cases is that the taxpayer has already applied for refund at that point of time, and these ineligible credits are not being sanctioned, or rather has been rejected in the course of the refund process. If it is rejected in the refund process, after automation of this refund, you would have got the recredit. But these things have happened prior to 2019, and hence the taxpayer has not got the recredit. Now, I'm trying to explain the officer, see, I do agree there is an ineligible credit. But on the other hand, this ineligible credit has been claimed as part of refund, and at that point of time, it has been debited. This debit tantamounts to reversal, because I have never got the recredit. I have neither got the recredit nor the refund has been sanctioned, which means the debit which has happened in the form of RFD 01 application itself should be construed as reversal of ineligible ITC. The problem here is the officer is not ready to understand or appreciate this matter. Though he understands, probably he is also bound by his own, procedural instructions. So then, he said, that's a different department. This is a different department. If your jurisdictional officer or your, adjudicating authority or the proper officer has rejected, you go and get the recredit from him. I am doing this as part of audit. I cannot try to equate these two. Okay. See, imagine we are talking about, cross empowerment between state and central, cross empowerment between all these things, right? DGGA and the GST officials and all that. Having said that, even within state or within central division itself, there are two separate, divisions for the audit and for your routine assessment. Between these two department officials, they are not ready to, come to an equation. But probably these things may come to an equation when the matter has to go to commissioner. But if the commissioner is again not going to appreciate these matters, it has to go to the tribunal, and again tribunal has not formed, and not every matter can go to the court as well. So imagine these are going to cause unnecessary litigations. So my suggestion is, please evaluate these kind of matters, and wherever any recredit is pending, obtain the recredit. And if that tantamounts to, if that is relating to any erroneous credit, then immediately make the reversal so that you can also save on the interest cost. In fact, in spite of all these, the interest is also being demanded. They're trying to say that, see, I originally debited, right? Had I not debited at that point of time, I would be probably having the credit till now. Okay, so again, it invokes some kind of issues under section 88B, rule 88B and all that. I'm not getting into these kind of issues relating to interest, but what am I trying to again read that evaluate if there is any recredit pending, evaluate if there is any erroneous refund, repay that and then get the recredit, and then these kind of recredits, make sure that you are obtaining the recredit, and wherever it again requires, make a reversal of the ITC after obtaining the recredit. So this is going to squarely equate whatever errors that has happened in the past. Okay. At least you have to do this exercise if the department audit or inspection is going to be initiated. Because see, one more point I will add to it. These recredits are also going to help you to pay any tax liability that is going to come up, because probably I'm not having this as part of this slide because it's not relating to refund. But recently, a clarification has been given, again a very taxpayer-friendly clarification, that ITC can be utilized not only for your current payment, any balance in the electronic credit ledger can be utilized for tax payment relating to current tax liability, and as well as relating to past liabilities arising out of your self-assessment or arising out of any proceedings from the department as well. Which means there is always this issue which is happening, that the department goes on to say that you are having electronic credit ledger balance today, that could be an accrual out of your current period ITC. You cannot be utilizing this for payment of past period tax liability. This is an issue which is faced by the taxpayer. So again, a clarification has been brought, make it very clear that even if it is your liability could be relating to 17, but your credit accrual might have been relating to your 21, 22, or even 22, 23. Doesn't matter, as long as you have your credit ledger balance. The credit ledger balance can be utilized for the purpose of payment of even your past tax liability. But having said that, you still have interest consequence. But at least the tax component can be met without your cash flow issue. Okay. Now, why am I touching upon this point? That evaluate, if you are going to evaluate and if you are going to find out that there could be some recredit which is pending in the past, please do apply and take it to PMT03K. And then once that has been received, then you can use this even for any past period related liabilities. This has to be scrutinized even when there is going to be any department audit or department inspection as well. And you don't need to really wait for it. You can even make a verification at this juncture itself. So moving on, the other notification is on the SEZ. SEZ, I'm sure we have, there are still issues on this. One or two of the major issues is on this authorized operation. The other one is the attestation by the specified officer. Here again, it's a taxpayer-friendly amendment. Taxpayer, see, what happens is the rule only talks about specified officer. See, under the SEZ Act, specified officer is only the JC or DC or AC. But what really happens is not every assistant commissioner or deputy commissioner is sitting there and trying to give this acknowledgement. Most of the time, these acknowledgements are given by the inspector or prevention officer or superintendent, right? So those are the categories of people who are trying to give this attestation for having received the goods or service. But first of all, getting the attestation itself is a challenge. And having received the attestation, you are still being, challenged that he is an authorized officer but not a specified officer. So now the anomaly has been removed, which means the specified officer or authorized officer, both are empowered to give this acknowledgement for having received the goods or services in the SEC. The next notification, recent notification is relating to claim of refund or export of electricity. If for want of time, because we hardly have another 45 minutes to go. So for want of time, I'm skipping all the amendments which is relating to export of electricity because that is a very industry specific amendment. Probably if you are still lucky enough to close the session on time, which I know I'm not sure if it's going to happen, but we will come back to these questions because it's not applicable for everyone. Okay, a statement has been prescribed for this. The second point in this slide is very important. When it comes to export of goods without payment of duty, under LUP, this is an issue which is already there. Okay. What is prescribed is that the export value has to be minimum out of these two. That is the FOB value in the shipping bill or bill of export, or the value declared in the tax invoice, whichever is lower. So what happens is Circular 37 already prescribes that you need to take the shipping bill value or the tax invoice value, whichever is lower. It does not talk about the FOB or CPIC, but probably the intention was like that. Let me give you an understanding of why at all we have this amendment. If you look into the foreign trade policy, as far this is to keep this refund in line with the foreign trade policy. If you look into the foreign trade policy, be it RWTP or MEIS or duty drawback, any of these incentives, all these were given at FOB value because some of the exporters may be doing at FOB, some may be doing at CIF, some may be doing at DDP. Now, how is it going to differentiate? Just that no, end of the day, your export proceeds is only for the FOB value, right? Whatever you are going to mark up over and above that as CIF or DPP, it is because you are additionally incurring the cost for the insurance or the freight or for the clearance at the destination port. So the real export happens only, it stops at the FOB value level. So to create an uniformity in the way in which the export incentives have been received, if you read all the foreign trade policies, all the incentives related to FTP are given only at FOB value. So as part of this, since refund is also considered to be one in line or under the foreign trade policy, now the rule has been amended. See, this was already being pointed out by the C&AG in the audit report, and then this has been already followed by all the tax officers in the field formation. And having done that, the matter has been time and again contemplated because from the taxpayer's perspective, this is nowhere being prescribed in the act or the rules or the circular. First of all, circular is not applicable for the taxpayer, but even if I try to make it applicable, still the circular also does not say about this FOB value. So why should I be restricted to the FOB value? This is the issue. Now that has been addressed by way of bringing an amendment in the rule, wherein either of these two has to be taken, whichever is the lowest value. So I'm skipping this slide on export of electricity. Now we are getting into the next matter relating to inverted duty structure. Most often what I understand is that this inverted duty structure and deemed export is something, what many professionals find to be a gray area. That's a gray area. Unless and otherwise you are into full-time practice in the direct taxation, people find it always complicated. So let me try to simplify it. Okay. Before getting into all these PKC footsteps, this is again another, most popularly circulated case decision in the WhatsApp groups, isn't it? So let me give you a quick understanding of what is this inverted duty structure formula. What happens is the input rate is higher than the output rate. So because of this, there is an inverted structure which is getting formed. I'm not saying that the input tax is higher than the output tax. The input rate should be higher than the output rate. But having said that, when I say input is confined to only goods and not services and capital goods. And when it comes to output, you can consider output of goods or services or both. Okay, because many people have this wrong understanding that output should also be only for goods. No, it doesn't work that way. As far as output is concerned, output of goods or services are good. But for input, it is only input of goods. Now, if you are falling into this kind of inverted duty structure, except for certain, specific HSN codes which are being restricted, all others can get refund of this accumulated credit because of the inverted structure. So what happens, let's say, for example, you have one of your input is falling under 18%, but your output is always at 5%. So this may result in accumulation of credit. This is there in many sectors, let's say, leather industry, or you take textile industry, or you take, genset industry. There's a lot of industries where this accumulation is common. Is there even in works contract industry? But what is the issue here? The issue here is that if you read the Act, where credit has accumulated on account of rate of tax on input higher than the rate of tax on output, except where it is being specifically prohibited, refund can be applied. The issue here is the Act does not say that refund has to be claimed only for input of goods. The Act talks about the condition and the rule talks about the formula. If you read the formula says that input is only the net ITC which has to be considered for the purpose of calculation is only input on goods, and you cannot include input on services and input on capital goods. Now, because of this, many industries, even though they are having inverted duty structure, still they are unable to get a good refund benefit, because most of the time the credit accumulation happens not only because of input but also because of services, because most of the services are at 18% category. Most predominantly services are in 18%. But all anything is in 5%, that is also you cannot take the IT benefit. So input services is falling into this prohibited category. So you see the way in which the matter has been argued, you cannot say, why are you restricting? Because the government can restrict. Government has the power to restrict. But the question here is that when the Act does not prescribe the restriction, whether the rule can prescribe the restriction, which means whether the rule is overriding the Act, does it mean to say that the rule is ultra vires the Act? That is the question in front of the Gujarat High Court as well as the Madras High Court. Gujarat High Court, in the case of VKC Footsteps, gave a favorable decision. But Madras High Court gave it, the decision was in favor of the tax department. So we have two divergent views. So while the Gujarat High Court says, no, the rule is ultra vires and hence you can get refund even on input services, what the government went on to do is that let us rationalize the rate of tax so that there is no inverted duty structure. There are two ways to rationalize. Either you bring down the input rate or you increase the output rate. Basically, there is an inverted duty structure. Either you can increase the output rate or you can reduce the input rate. The government naturally opted to increase the output rate. That's why if you see in January 2022, when a lot of rate amendments have happened, this has happened even for the leather industries in the case of all these footwear. Okay, that is mainly because of this VKC decision, Gujarat High Court decision. Inverted duty structure, refund let me remove that inverted duty structure. So that's probably what. So let's not get into that, get into all those. But the point here is we had two divergent views, but finally, when the matter was decided in the Supreme Court, the Madras High Court decision has been upheld, which means the decision is not in favor of the taxpayer, but rather in favor of the tax department. The Supreme Court said it is completely within the power of because the Act says as may be prescribed by the rules. The rule is, and hence the rule is prescribing that, the formula is being prescribed. The formula is very well within the Act and it is not ultra vires, which means to say that not including input services in the net ITC is not ultra vires Act, and it is very well within the authority of law. But having said that, If you read that there is a last para to this Supreme Court decision where the Supreme Court acknowledges that there is an inequity tied to the formula prescribed under Rule 895. The Supreme Court urged the GST Council to reconsider the formula. Now, what is that inequity? You will understand and appreciate the inequity once you understand what the formula change that has happened. So after the Supreme Court decision, the formula has been amended suitably by the GST Council, and that has also been notified in July 2022. So previously, the formula is that, without getting into the formula, let me try to explain it to you in a very simple, understandable language. What do you say? Well, what do you say when I talk about inverted duty structure? Accumulation of credit, because your input is higher than your output. Your input is higher than your output. If you say your input is restricted to only goods and not services and capital goods, your output should also be considered proportionate to input, isn't it? So it cannot be that for the purpose of this input, you will restrict it to only input of goods. And when it comes to this, subtracting figure, you will consider the entire output tax liability that is being paid. So that is where the inequity is. So if you see the previous formula, it is net ITC on goods into turnover on inverted duty structure divided by adjusted total turnover. So there is a proportion that is being applied to this input in the form of inverted duty structure divided by the total turnover. And now when it comes to this output, there is no such proportion that has been prescribed. Straight away minus output tax liability on the inverted rated supply of goods. Now this is where the amendment has taken place, because now the tax payable which is being subtracted, that has to be also factored proportionate to net ITC divided by the ITC availed on input and input services. Okay. Now, because of this formula, because of this formula revision, even though the decision is not taxpayer friendly decision, even though input services is not still forming part of your refund claim, this is resulting in additional claim of inverted duty structure refund because the formula has been ratified to suitably. Let me illustrate it by way of an example. The old formula, as you can see here, turnover net ITC on which you are applying this proportion of turnover minus the tax paid on output supply. Here, what has changed is into net ITC divided by net ITC availed on input and input services. The proportion has been applied in this as well. If you see, for example, I'm not getting into this illustration because I don't think I have time. I'll probably take you through this illustration. But with a simple illustration, same numbers under the old formula. This is the example. Under the old formula, if you see the refund claim amount is negative, which means you cannot get refund claim. But in the new formula, because you are applying the proportion, you are able to get a favorable refund claim amount of 54,000. But whether it is really favorable to you or not would depend upon what is the quantum of input services which is involved in your inverted duty structure. So what is the quantum of input services which is involved in your ITC? The higher, if you see in my example, input is 1.95, input services is 1.25, and capital goods is 30,000. So which means out of 3.5 lakhs of ITC, you have 1.25 lakhs credit relating to input services. So here, as long as this quantum keeps going up, your proportionate subtraction value is going to come down, because of which you will end up in a higher inverted duty structure rate. If this component is very insignificant, let's say in this example it is 25,000 only instead of 1,25,000, probably this is not going to give you a greater benefit. Okay, so you need to understand. So what I would suggest is, instead of trying to understand, if you are doing this for the first time or if you are trying to crack this, don't try to understand the formula. Blindly apply the formula, you will get the result. If you try to understand the formula, it might be sometimes difficult. The next point here is, after this particular amendment has happened, there is a circular which has been very recently issued a couple of days ago, wherein they have made it very clear that the amendment is not retrospectively applicable. This amendment has happened only with effect from 5th July 2022, which means you can apply this formula amendment only prospectively. அதுக்கப்புறம் ஒரு பாயிண்ட் சொல்றாங்க. It is applicable in respect of refund claim applications made, filed on or after 5th July 2022. So prospectively அப்படின்னு சொல்லி retrospective கொடுத்துருக்காங்க. So which means if your refund application is filed after 5th July 2022, what did I tell you at the beginning? You have 4 years as the time limitation, correct? Even today, you can go back and make an application relating to November 2018, which means the application which is filed today, that is 25th November 2022, which is after July 2022, 5th July 2022, you can apply the formula, which is the revised new formula for the refund claim, which could be pertaining to any period on or after November 2018. So let us understand this very clearly, which means you have to go back wherever you have a credit accumulation, wherever you have a closing balance in your electronic credit ledger. Please evaluate the possibility of inverted duty structure, and then you go back and check if there is any way you can get the refund. Having said that, I want to highlight one more clarification which has been given on this, which I'm not having as part of this slide. For an output Y, you may be having multiple input X, X1, X3, X4. There is no such condition that for you to test the condition under section 54 subsection 3, it is not that your primary raw material you have to have a higher rate as compared to the output rate. Even if you have one raw material, one of your 100 raw material, where your rate of tax is higher than the output rate of tax. Even if you have into one goods, which can be in the form of consumables, which can be in the form of anything for that matter, it can even be packing material, it can be even your office supplies, whatever it is. There should be some goods, cannot be services. At least one good which you have purchased during the period. When I say period, again, if you have to go back, the relevant period is the period for which you are making the application. Okay, during the relevant period, then you get covered into the ambit of inverted duty structure. And once you are getting covered into the ambit of inverted duty structure, then you cannot claim the input services directly. But then because of the formula change, indirectly you are able to get proportionate benefit for the input services. I will put it that way. Okay. So my humble submission to all the professionals is that wherever for your taxpayers, they have any credit balance accumulated in the electronic ledger, please go back and reevaluate the possibility of refund and inverted duty structure. Okay. So if you are not able to find the way, you'll probably seek the advice of any tax experts, but then please do not ignore thinking that it is not possible to get. I'm not saying it is possible in every scenario, but there are still good chances that you are able to, get refund. Okay, but it has to be analyzed. There is no straightforward answer to it. It has to be analyzed in multiple angles, and then you need to arrive at a conclusion. Point number 1, whether it is falling into the condition. Point number 2, if it is falling into the condition, how much do you get as a refund based on the formula? These two things have to be evaluated. Now, the next point here is again, there is another restriction which has been made for this inverted duty structure, wherein the restrictions are being, as I already told, the government has every power to levy restriction for certain category of goods based on the HSN. Earlier, we even had it for textile industry, and then it has been removed. So similarly, the government can place any kind of restriction for inverted duty structure for a particular category of goods. So like that, they have given the restriction. The question here is, whenever the restriction has been given for a particular HSN, it is to be read prospectively and not retrospectively. In fact, I remember when this, textile industry, they have lifted the restriction from August 2018 or 19. Okay. But at that point of time, they gave a clarification on how you need to factor what is the accumulated input tax credit. Because they said it's a prospective rectification. So if it is a prospective rectification, whatever accumulated credit that you are having, you need to reverse the corresponding accumulated credit before you go and make an application for the future period. Because the accumulation happens perennially, right? So which means, had you made a claim submission at the previous period, what would have been the claim submission? That is a component which you need to reverse before coming to the current period. Otherwise, your credit accumulation would be even related to past period, and hence you are going to be additionally benefited. But having said that, the reversal is mandatory only if you are going for the refund submission. If you are not going for the refund claim, probably you are getting it otherwise squared off in some other way, then you don't need to do the reversal. Okay. Again, as I said, if the restriction is newly formed, then you have to apply this prospectively only on or after the date on which the restriction has been. In this case, it is on or after 18th July 2022. The next matter relating to inverted duty structure is that there was a circular for 135, wherein there was a restriction which has been imposed that if your input and output are same commodity, same goods, you purchase, let's say, in July 22, you had a lot of rate amendments. So you made huge purchases in June. You are in a trader. So the same HSN code, you are going to sell it again. But by the time all the rates have gone up, all the GST rates have gone up in July 2022, and then you are selling it at the rates have come down. The rates have come down, and hence you are falling into the inverted duty structure. So what happens here is you purchased everything at 18%, and now that the rate of tax has come down, you are going to set it at 5%. So here the input rate is higher than the output rate. Can I get refund in this scenario? The circular says you cannot get it. Okay, though the circular can still be challenged because there is no such restriction in the act or the rules. The circular says you cannot get it because it's it's the same goods at different point of time. It does not get covered under the refund benefit. Okay. Now, without getting into the challenging aspect of the circular, the next issue here is the department officials try to blindly apply the circular. Cases where concessional rate notification has been issued. Let us say you are purchasing at 18% and then you are selling at concessional rate of 5% because you are supplying it to government or because you are supplying it to some institution where it falls into the concessional rate. So you are a trader, you are purchasing at 18% and then you are selling it at same commodity, same HSN. You are selling at lower rate, at concessional rate. Can this be claimed as inverted duty structure? The department officials rejected those claims also because it is the same HSN. You are selling under the same HSN, it's the same goods, and hence circular 135 is applicable, and hence you cannot get the inverted duty structure. Now the recent circular 173 says that it is permissible at different point, even though it is a different, whether it is a different point of time or whatever it is falling into this concessional rate notification, and hence you can get the refund. In fact, as a corollary, if you see, a lot of concessional notifications are also being withdrawn. We see most of the government projects, everything is now, the rate rationalization to remove the inverted duty structure, the rates have been increased. Okay. Now, the next point here is, if you read subsequent to the circular itself, came up very recently. After the circular, there is a Telangana High Court decision which says that this circular 173 goes on to give further explanation to the original circular 135. So which means this circular should be understood as if this is how you have to always read circular 135. That is the earlier circular. So this circular 173 has got a retrospective amendment, retrospective effect on the original circular 135, which means even starting from 135, even from starting from the date, 31st March 2020, going by the circular 135, this is how you have to understand and apply refund when it comes to the concessional rate of taxes. Okay. But unfortunately, these things have to be, clarified only at a high court level, and not everybody can go to the high court. So with this, by and large, we are coming to a, end of plenty of amendments that has happened in inverted duty structure. Probably at this point of time, I want to, because, we have discussed at length on inverted duty structure related matters. If there is any questions relating to this inverted duty structure, probably we can take it up. I think Shanmugha Mohana Krishnan has raised a hand. You can unmute and ask. I suppose you have an option to unmute.
Yeah. Hello. Hello.
Yes, sir, I can hear you.
Yeah.
Please
See, one of my clients, agarbatti manufacturer, even though all these refund and other things are happening and earlier services were not allowed, input services, there is always a, electronic credit ledger has more than 4 crores balance at all times. So what is the way out? How do we, can do something? This is one point. And other point is they open branches in different states. So there also different GSTN number and then electronic credit ledger as balance. Then when the business comes down, they don't do any business, that balance remains as it is. If we surrender, then that balance is gone. So this involves lakhs of rupees. So how do we go about this?
There are two things to it. Since you
Yeah.
are saying multiple branches are there, first of all, you need to see if there is a situation where credit accumulation is there in all the branches, across all the branches, or you have in only few branches. Okay. Or some branches you have credit accumulation, some branches you are paying by cash. Okay. Now, let me complete the, answer to it. So, it could happen sometimes if you are not, complying with Schedule 1 for cross-charging. Okay, you need to probably revisit that aspect if you are paying by cash in one branch and are having credit accumulation in another branch. But let's assume it is not that. You have credit accumulation in all the branches. Then, as I already said, first thing is understand what is the reason for credit accumulation. If your input rate is higher than, even if there is one input where your input rate is higher than your output rate, then you definitely fall into the ambit of inverted duty structure. Then which means you need to next move on to see the revised new formula. As I already said, the formula is applicable for any refund file, which is any refund that is filed after this July 2022, which means even for any refund that is pertaining to way back in November 2018 also you can apply now. But the important point here is you need to evaluate first the prima facie things that you need to evaluate is the credit accumulation could be even due to input services. Doesn't matter. What is the cause is different. But at least do you have any input where the input rate is higher than output rate? First check that part. If that is there, then you check the refund formula to see if you are able to get the benefits. But what is also important is see if this particular industry, if this particular HSN is falling into any specific category which is being specifically prohibited under the notifications. If there is no such specific prohibition, then you have to evaluate the condition and then followed by the formula. Okay. I hope this answers your questions. What I suggest is we have a lot more questions. If you want to discuss more on a particular case, towards the end of the session, I will be sharing my contact details as well. You can probably reach me out, separately as well. I will be able to support you, clarify you on a one-on-one basis.
Sure.
Or if time permits, we will also come back to you and take up the questions towards the end.
Okay, madam. Sure, I will contact.
Sure, sir. Sure. Yeah. Thank you. And yes, I think few more have raised their hands. If anybody else, yes, sir.
Yes,
please.
yes, ma'am. Actually, for one of our clients, they are into manufacturing. Manufacturing of safety items. Where they are having
sorry, sir.
Safety items, safety products.
Items. Okay.
Yeah. So they have inputs at various different GST rates like 5, 12, and 18, and whereas they are having outputs at rating only 5 and 18%. So while calculating for inverted duty refund, only 5% turnover will be coming under inverted turnover. For one particular deal, what happened is like they have purchased a single input which is having a rate of 28%, due to which like 18% turnover has also fallen under inverted turnover, due to which around almost 20 lakhs refund has been reduced. So this is the case, or whether there is any alternative for this one, because just because of one single purchase costing around 14,000 only, so the whole refund almost 20% of the refund has been reduced actually.
No, sir, that's not probably the way to look at it. See, let me make it very clear. input, whether it is see, this is also there in one of the circulars. The departments were doing this mistake. See, what they try to do is that when I say input rate should be higher than the output rate, it doesn't mean you will factor only those input rate which are higher to be in the to be factored in the calculation, to be factored in the formula. See, only the condition for you to satisfy the condition, input rate should be higher. At least one input rate should be higher. But once you satisfy the condition, all the input on goods has to be collected, cumulatively considered as net ITC. This is one part of it. Now, coming to the outward, what do you call as inverted duty structure turnover? That has to be seen in the relevant context, which means if if one of your input is falling into 28%, let's say even if one particular input on goods is 28%, then all your outward 5%, 12%, 18%, everything is falling into the inverted duty structure. It is not that only 5% is falling into the inverted duty structure. Okay. You have to see, what is the highest rate of input and what is the highest rate of output. But having said that, for you to satisfy the criteria, you don't need to literally compare the highest rate of input and highest rate of output. There can also be situations where you have an input at 28% and you also have an output at 28%. Okay. But you parallelly have another output at 5%. Now, if you correlate, you have an input at 28% and you have an output at 5%. Now, this is also leading to an inverted duty structure.
Okay.
So the point here is, first of all, we need to make it amply clear how are we satisfying the criteria. Before rushing into the formula or before rushing into any of the calculation or making the format, uploading the application, all these things are secondary. First thing is feasibility analysis. As I said, feasibility analysis for which you need to do two aspects. One is understand, go through the entire, first of all, take a complete business understanding. Second thing is, completely scrutinize the inward and outward register. And also see to it the inward and outward register, the rates that are being applied is also correct. Okay. Inward rate of tax, ensuring that the rate of tax is correct is not in your ambit. Whatever the supplier is going to charge you, that is what is the rate that you have to take, because classification is not the responsibility of the recipient, it is the responsibility of the supplier. But when it comes to outward, it is the responsibility of the supplier. We also have to first of all see what is the classification that is made by the supplier, whether the classification is correct or not. Given this classification, whether the rate of tax that is applied is correct or not. If this is the rate of tax on output, what is the rate of tax on input? Completely make a summary of the rate-wise understanding of the input and output. See to it whether it, somewhere you are able to match the condition. Only if the condition is matched, the next level of filtering is it specifically prohibited in fact in any of the notifications. If that is also not specifically prohibited, then first of all, you are having the eligibility. Then you move on to the formula. When you move on to the formula, naturally the first thing that you have to see is, categorize your input as the input services and categories. And then you have to apply the formula and see what is the benefit that you're going to get. You get a formula result, and that formula again you have to compare with two other numbers, minimum out of the three, whatever is the calculated figure or the credit ledger balance after filing the concerned relevant period return, or the credit ledger balance as as on the date of application, lowest out of the three. That is what you can take it as. Okay, so these are all the complete list of things that one has to do under inverted duty structure. So yes, sir, I hope that answers your question. If you still have, as I already told the participants, I'm sure, see, this inverted duty structure is one area where professionals are having huge challenges, but let's try to, address the matters as long as it's commonly applicable in the larger interest of all. See, that's exactly the reason why I skip, things like export of electricity and all that. It could not be something which is commonly applicable for all. But if you have a specific query relating to a specific line or a specific industry, please do, let's keep it part at a later point of time. I think two more participants have raised their hand. Again, my suggestion is, if that is a commonly applicable query, please do raise it here. But if you think it's a specific query, please post it. I will be, happy to answer it separately. Because we are left with another only 20 more minutes to go. Okay, and we still have a couple of points as well to present. But I opened up this part because I have been seeing a lot of questions and a lot of people raising their hand. But I'm really not sure if we are going to have time towards the end. But inverted duty structure, I wanted to conclude the Q&A when we have the momentum of understanding what it is all about. Okay. Yeah. So I think we have a few queries. When this new formula is applicable retrospectively, I think the matter has been already answered. And then is it fine to file GST return as per the invoices raised when there is beyond the marginal difference with FOB in respect of value and quality. Pavitra, I'm not able to get your question clearly. Probably we may have to take it as madam, between FOB and invoice raised, how difference in the value of supply and quantity considered normal. In respect of coir with export, there is a difference of around maybe I think I need to understand more on this question before I answer this, whether we can claim refund both under inverted duty and also under export. Very much permissible. There is no prohibition at all. In fact, you can, one can claim under refunds on all categories for the same period, but only prohibition is that you cannot claim export with payment as well as without payment for the same period. Okay. But you can claim export refund as well as SEZ refund, as well as inverted duty structure refund, as well as deemed export refund, as well as excess payment of tax, as well as Section 72 refund, as well as cash balance. Everything can be parallelly made for the same period, provided you have all the categories of refund. That's why you have certain formula restrictions, right? So as I said, you have to calculate the figure, and you also need to compare the credit balance after the period or the credit balance as on the date. Okay, we have done that. Practically, if you say, for example, textile industry who are into export, for the domestic you fall into inverted duty structure. For the export you have export benefit as well, right? So let us say, for example, leather industry who are also into export. You're also making SEZ. Let us say you are also having merchant export. There is a concept called as merchant export, 0.1% sale. I don't think we have time to deliberate it, but there is a merchant export category. If your recipient is making further export, then you can charge him a concessional rate of 0.1%, for which the conditions have to be put. It's a huge, procedural compliance which needs to be done. But if you are able to do that, you can get into the export merchant export category. In which case, also inverted duty structure also can be claimed. There is a circular for this. Okay, so all these can be done even for the same period. Let me make it very clear. I hope that answers your question. Taxpayer has purchased. So we will probably come back to the questions at a later point of time because we have more matters to cover, especially on export of services. I don't think we have dealt with detail on that. We have more slides to cover. And coming back to the question. So this is, for all the duty-free shops in international airport. Previously, there was a separate provision for it. Now that they have removed all the provision and they said whatever is applicable for a normal exporter, the same is applicable for you. Any sales that is made from a duty-free shop is to be treated as if it is a normal export. And the next part is on, see, this is again a taxpayer-friendly notification. What happens is some of the exporters are termed under this risky exporters category. So if they make export with payment of tax, sometimes it is withheld in the customs. For the export with payment of duty to happen, the ICAI correlation has to happen. So here, if the correlation fails, then the correlation fails, it gets blocked. That's one part of it. Sometimes they get specifically withheld when the exporter is falling into the risky exporter category. In those cases, what happens is, again, the problem, as I said, you go to the customs will say, I cannot do anything because it is all automated. You go to the GST officer will say, no, I cannot do this because it's the ambit of customs. You don't even have a refund application in hand because that's no specific refund application. The moment you file 1 and 3B, that is all. That's the end of refund application. Okay, so the exporters are really struck with this issue because nobody is taking the ownership or nobody is held responsible for these kind of issues. This is a taxpayer-friendly notification wherein it says that in these kind of cases where it is specifically suspended or withheld in customs, then the system will automatically generate GST RFD 01 form, which is the refund application, and that goes and sits in the jurisdictional officers, portal. which means you don't need to make a separate application. There is a portion of refund that is held. Now that the system is generating an automated RFD01 refund application that has to be disposed of by the GST jurisdictional authority after making a proper scrutiny of it. Okay, this is a very good amendment actually, because I've been seeing a lot of such cases where we are clueless on who is going to take the responsibility of the whole matter. So yes, we are now moving on to export the zero rate supply related, couple of issues that we are having. What I see is that one of the major, this is not amendment which has taken place. These are amendments which have not yet taken place. The day these things are going to be notified, we are going to have these issues. But having said that, we need to be aware of probably, government is having these thoughts. One day, some fine day, they are going to implement all these things. So section 16 is the governing section as far as the zero rate supply. Zero rate supply is there for two categories. One is for export and another is for export. As far as this SEZ is concerned, the problem here is authorized operation. Only when it is supplied, only when the supply of goods or services are happening for the authorized operation, this is eligible under SEZ. I mean, this is eligible for refund. This particular authorized operation has been coined only in the rule, but the problem here is there is no such terminology which is there in the Act, which is again similar to what we had in the inverted duty structure. But this is slightly different from that, because in inverted duty structure, you want to say that the rule is going to prescribe further procedures. Okay. The point here is it a procedure or is it a condition, prima facie condition? Okay, the whole issue which has been debated in the DKP. Okay, now this is also a similar issue. When the Act does not say authorized operation, should the rule talk about authorized operation? Whether the rule can restrict that only when you are authorized operation. If you have to understand what is authorized operation, you can Google search. There are 66 lists of authorized operation which is prescribed for example. Only if your goods or services are falling into the authorized operation. Again, when your invoices are being attested by the special officer or the authorized officer, as we already said, you can go for the refund. Okay. Now, as I said, this is the issue. But the government has already coined the way out for this authorized operation. Probably one fine day we are going to get this modified with prospective effect from 1st July 2017, which is, all the disputes. Now, this is one part of it. The other part is, there is subsection 3 and subsection 4, where you have a, major amendment which is pending notification. The point here is when it comes to this export with payment of duty, the government is trying to make a restriction. In this case, rather than specifying that it is going to be restricted for a category of people, they're probably trying to say that this is going to be allowed only for a certain sector of people. Okay, so the exporters, those who are probably falling into this category, they may only be eligible for refund. That's again a amendment which is pending notification. So this is exactly what I had. The other point is also on the realization of the sale proceeds. The problem here again is when it comes to the goods. See, for services naturally only it's intangible. So you can even, for one of the condition for export of services itself is that you should have received the foreign currency. Okay. Again, we have certain RBI liberal views, liberal policies because of the Russia related issues. But without getting into all these matters, as far as the services are concerned, because it is intangible, the point is clear. Only if you are bringing in forex, you even consider it as export of services. What happens for the goods? See the proceeds at a later point of time. There is a rule 96B. It says that if you are not bringing foreign currency, in case of export of goods, if you are not bringing foreign currency at a later point of time, then it does not fall, you cannot call it as an export of goods, even though the goods have moved out. Yeah, even though you have a valid EGM and all those stuff, this will still not be considered as export of goods, and hence you need to return the refund, return the erroneous refund what you have already received. Okay. So this has been prescribed in Book 96. As I already said, rule without an act. So in order to not invite these kind of issues, an amendment is in the proposal stage, but that is yet to be made effective. So the next part of it, one issue which is faced by this deemed exporters. Okay, and I'm not sure whether everybody is familiar with this concept of deemed export. So just for the benefit of those who are probably not familiar with this concept, I'll give you a basic understanding of what is this deemed export all about. See, whenever the supply of goods or services happens to SEZ, naturally it is covered under the zero rated supply. But when it is supplied to certain other categories like EOU or the other STP zone or ESTP, these kind of other zones, and whenever the supply is made to a recipient where the recipient is covered under the scheme of advance authorization or EPCG benefit. Okay, the advance again, I have to explain you what is advance authorization and EPCG benefit. It is basically a benefit where you can import the capital goods without paying the import duty. Okay, for EPCG, when it comes to advance authorization, import of your raw material, basically the goods, without payment of customs duty. Okay, so whenever you are taking this benefit in customs, then the transaction made between these parties, let's say, I am the supplier, I am supplying to the recipient. That recipient is covered under this. He is an exporter and he is getting himself covered specifically under these kind of benefits. Then the transaction that happens between me and this recipient is considered as deemed export. Okay, probably the terminology that I'm doing may not be exactly as how it is framed in the law, but I'm trying to explain it in simple layman terms. Okay. Now the point with this deemed export is that the question is, should the supplier get the refund or the recipient has to get the refund? Then the law has been made very clear that either one of them that can get the refund. Okay, which means I supply the goods to this deemed exporter. There is something that I am charging in the invoice. Okay, now this tax on this deemed export supply that happens from me to the deemed exporter, to this category of recipient, this transaction, there is a tax invoice on which I am paying the tax amount. That tax amount can be taken as refund. Okay, so this refund, if I am charging the tax, he will get the refund. He will have to apply for the refund. Or if I am not charging the tax, then on my ITC, I can get the refund. Okay, because I don't charge tax, so I can get the refund. This is very similar to how it operates for SEZ as well. But the problem here is you are charging a tax to this deemed exporter. To this category of recipient, what I colloquially call as deemed exporter, or rather a transaction of deemed export on which you are charging the tax. Now, what happens? The problem faced by this recipient who is having this kind of advance of EOU scheme benefit or whatever it is, for him, if he has to apply for this refund, how he can apply for this refund? There is some way in which he has to apply for the refund. Okay, so for this, there is a specific category which is available in the portal. Okay, there is a specific category for deemed export refund application by the supplier, refund application by the recipient. These are two separate categories. But the portal is insisting that for you to make the application, the amount has to be debited in the electronic debit ledger, electronic credit ledger. If you have to debit the electronic credit ledger, you should have a balance in the electronic credit ledger. If you have to have a balance, you should have availed the balance. That is the only way in which you can avail the ITC is through GSTR 3. And they said, yes, you avail this as a credit through GSTR 3 and then let it come in your electronic ledger. Then you debit that electronic ledger and thus you make an application of refund. The next issue arises. The Department of Legal started considering that there is an ITC. If it is an ITC, it is subject to all the provisions of Section 17, starting from Section 17(5) and then 42, 43. All the provisions are applicable because it is the ITC. This circular is again a taxpayer principle. It says that this is only a facilitation mechanism. you are being asked to route, take this amount through GSTR and then you are required to debit it in the electronic credentials. This is more because there are difficulties which are faced. The portal is requiring you to debit the electronic ledger, and hence you are routing it to the 3B, and then you are bringing it into the ITC balance. So simply because you are doing it for the sake of convenience doesn't mean it is taking the color of ITC. When it is not an ITC, it will not be subject to Section 17 restrictions. So naturally, this is not subject to any of the ineligible credits category or Rule 42. None of those provisions will apply. So whatever is the ITC which has been taken, the entire ITC will take the color of net ITC, which is what you are going to take it for the purpose of this export. So again, deemed export, you have this, time limitation. As I think this I have already discussed in my earlier slide on the relevant date calculation. It has to be taken based on the return that is filed by the supplier, irrespective of whether the supplier is going for the refund or the recipient is going for the refund. But whomever is going to go for the refund, they have to get a cross confirmation from the other party that the other person is not going for the refund. So like an NOC. Okay. The format, everything has been prescribed. So the next point is on tran credit. Okay, there is an exceptional situation in the case of service tax. So service tax RCM has been missed to be paid, and then the SC is paying this only in 2018. And April 2018 he has paid, and then May 2019 he has applied for refund under the service tax. This was rejected because under service tax 1 year is the time limitation, and then it has been time passed. So the matter here is, referring to section 142.3 and 142.8b, this would have formed part of your credit had there not been a GST law. Only because there is a GST law, I cannot go back to service tax and then I cannot take the, tax credit, which again I cannot be transitioning them. So because of this prohibition only, I am coming for refund, and hence you cannot apply the, time limitation which is prescribed in the service tax. This is a favorable decision which has been taken by the Sestat of Chennai. So the other important decision here is again from our Madras High Court, where a deposit has been, basically what happens in the case of investigation is that there is a huge coercion that happens. In fact, the High Court decision is using all these words. The very fact that the petitioner had remitted not one but not two installments of tax, which reveals that the payments were voluntary, as if they had been coerced, as alleged, the payments would have stopped with the first installment. This was the argument. The point here is the High Court observed that merely because the SC has paid under the stress of investigation, signed a statement admitting that there is a tax liability and also has made few payments as per the statement, cannot lead to self-assessment or self-ascertainment. Ascertainment contemplated under 74(5) is of the nature of self-assessment and amounts to a determination that is unconditional and no one that is retracted as in the present case. And not one. So it was noticed that records did not contain any ascertainment of tax liability by the revenue officer. Therefore, it is held that the amount collected, that is 2 crore, shall be refunded to the petitioner. So merely because at the time of investigation, the assessee has paid, an amount under even DRC 03, that doesn't mean he has accepted his liability, and this is a self-assessed tax against which he cannot go for refund. There should be a separate, proceedings which the department should have initiated even under section 74, and then they should have ascertained the tax liability, and the department should have valid reasons to say why is it ascertained tax liability. See, you have to also say why the tax liability was paid. There is actually a liability for him to pay. The tax should have been assessed by the officer to say why this is liable and why it cannot be refunded. Simply because he has paid it voluntarily under DRC, you cannot say it is a self-assessed tax liability and hence it cannot be refunded. There should be a corresponding, admitted tax liability. Okay. This could even be a relevant case wherever you are having issues relating to payment of taxes made voluntarily under DRC. But in reality, there is no such liability. You can always refer to these kind of case decisions. So export of services, we have a few issues. I don't think we have time because it's already 5:30. But there are two key issues when it comes to export of services. One is the intermediary services. I really wanted to deliberate on this intermediary services, but we do not have time. But let me give you a basic understanding because we have some of the circulars in September 2021 on this. The two important issues when it comes to the services is, first of all, or rather three, I would say. Okay. Three important issues. Issue number one is, one of the criteria for export of service is that there should be a convertible foreign exchange involved. And this is a practical issue. Okay. It is the taxpayer's responsibility to prove that the convertible foreign exchange has been received. RBI has given, not only RBI, there are certain circulars says that even credit risk advice, which clearly states that forex has been received, can be a valid document. Okay. But the problem here is that it is not being accepted as a valid document. The department is still insisting on FARC or EBRC because that is what is contemplated in the circular. Okay. This is one issue. The second issue is when it comes to transaction with foreign overseas, parent company or subsidiary, the department has a inherent inhibition in understanding this always as a distinct person. Okay, because there is a condition that the supplier of services and the recipient of services are not merely establishments of a distinct person. So sometimes just because you are a related party, the department try to get it covered under a distinct person, and hence the refunds get rejected. In this regard, there is a very beautiful circular which has been given which was given in September 2021. A very interesting circular. I actually wanted to read out all these three para, but I don't think we have the time to read this para. But a very important para is that it's clarified that a company incorporated in India and a body corporate incorporated by or under the laws of the country outside India, referred to company under the Companies Act, or separate person under CGST Act, and thus or separate legal entities. Accordingly, two separate persons would not be considered as merely establishments of distinct person in accordance with explanation 1 in section. I am sure most of you would have had some or other rejection when it comes to export of service under this category, because this is the most touched upon category for the department officers to reject. Okay, I wouldn't say it's they are rejecting merely, but the problem here is not well understood, or rather the officers are also not being clearly explained by way of a circular, just like of the way you have a circular in September 2021. Until then, there was no such circular. So there may be some rejections which has happened on these points. In all those cases, please go back and then refer to the circular and go for an appeal, or go back to this. Okay. So the next point here is on this intermediary services. Intermediary services, I'll first explain you by way of example. What happens is, there is a foreign company who are selling goods to India. Okay, let's say TCL is exploring the Indian market, and then they are selling TV in India. Okay. Now they are also appointing an agent in India who is not going to buy and sell the TV, who is going to identify these large-scale distributors or large-scale showrooms, the main players who are going to, this intermediary is going to channelize or bridge the Indian purchaser with the foreign supplier. Okay, so in this course, he is actually not making any sale on behalf of TCL, but rather he is only acting as an intermediary. Now, what is the issue here? In the case of intermediary, the place of supply provision states that place of supply is the location of the supplier of services. What happens here? TCL is paying foreign currency to this agent who is appointed in India. Okay, this agent is receiving in foreign currency. He is in India. The location of the supplier is in India, and the recipient of the services, because the services he is giving the commission service, the services of an agent. Okay, the location of the supplier is in India, and the recipient's location is outside India. So naturally, there is a export of services, and the money is also received in foreign currency. But the problem here is there is one more condition, that the place of supply should be outside India. In this case, because of this place of supply provision, Section 13(8)(b), the location of the supplier of services is in India, and hence this is not export of services. But there is a recent circular which was there in September 2021. The circular is not at all addressing this issue. Let me make it clear. The circular is not addressing this issue, but rather the circular is trying to redefine or trying to make it clear the scope of what is intermediary. What is this intermediary service? What are all the conditions for one to call as intermediary services? There should be a minimum of 3 parties. 2 distinct suppliers should supply of goods separately between those 2 parties, and then the supply of services between these 2 parties. And then the intermediary service provider have to have the character of an agent, broker, or similar person. He should not be dealing in his own capacity or in his own account. Subcontracting of a service does not, is not an intermediary service. The specific provision of place of intermediary services under Section 30 shall invoke when earlier, when either the location of the supplier of intermediary services or the location of the recipient is outside India. So, and again, there are 4 detailed illustrations which have been given in the circular, which we are not having time to discuss about it now, but the circular also acknowledges that these illustrations are only indicative and not exhaustive. This is actually a welcoming provision, I would say. See, I have had any number of cases where you go and try to explain, see, this has been explained in the circular. The officer tried to say, see, this is not an illustration. This is, so only in this case I will apply this circular. You have to understand that circular is trying to only give an illustration. It cannot be giving all the exhaustive examples. So officer, you cannot be, having a narrowed approach of trying to apply this only in those cases. You have to understand what is being contemplated, what is being said, and then try to, apply it in your respective cases. And yes, to conclude, I wanted to get back on some of the exceptional matters which, as professionals, we need to take care. We have discussed at length on all of these points, but I am only trying to summarize you. I am trying to get back to you with key matters which a professional has to take care when it comes to it, because we are all settled with routine refunds. I know, because it has been more than 5 years. But there are certain exceptions which we are sometimes, which is what I want to bring to your kind attention. Any credit balance, as I said, we have, at length we have discussed in case of inverted duty structure also. I'm not saying only under inverted duty structure. I'm not saying always you can get the refund out, but you should not ignore it. Probably you have some basis of how you concluded you cannot get refund plus, but please do revisit. As I said, lot of benefits, lot of matters have happened with this July alone. So please do revisit. Okay. And if you think there is any way, any scope for refund possibility, please make sure that you are getting, you are applying for this and then getting the refund. But having said that, please remember the very first slide what I discussed. There is no pre-audit, but there is always a post-audit. Okay, always we handle a lot of refunds. Always, make sure of this one point, that more than getting refund for the taxpayer, what is more important is the moment you get them a money, always make sure that they are not in a position to repay this money at a later point of time. Because it's like, you give them a benefit and then you go and tell them, no, it's not your money, you give it back to the government. That is definitely not a fair practice from our perspective. It may happen because of some ambiguity in the law, which is because of some future matters which is happening, but not because of our ignorance in the law. Okay? So please make sure that whenever you get any refund, there is no error in the refund, so that your clients or taxpayers are not in a position to repay this at a later point of time with interest. Sometimes it could even be with penalty. Any rejection, please reevaluate if there is any regret. Any erroneous refund whenever it is being paid, as I already said, however, for example, unless you go and knock the door for this refund, they are not going to give it to you. Okay. Any excess payment of interest, see if there is any way you can get the refund of this. Possibility of refund under inverted duty structure, reevaluate because of this change in the law. And then, most importantly, Aadhaar authentication check, which I have seen many times. Aadhaar authentication, bank statement details, whether it has been properly updated. Okay, The moment you open the portal, you have this error. Aadhaar authentication is not being done. We have this inherent quality of immediately closing the error. Error pathale close. The error we don't even read it. Don't do that. Read the error and see if there is anything that needs. And most last important point is there is the transition credit which has been closed. So please reevaluate all those cases. And 30th November is going to be the last date when the when the benefit is going to be closed and the sunset happen. Please make sure that all those kinds of transitions have been availed within this 30th. With this, we are coming to the end of the session. I'm sorry for exceeding the time. I hope you have found it useful. Since we have already exceeded 10 minutes, I don't think we have time to take the question and answer, but I have given my contact details. Apart from this contact details, you can always post your questions, SIRC as well, through which we will be receiving these questions and I will. But to reach me out, this is what is my contact details. You can reach me out. I will be able to support or assist or guide you with the best possible way. Yes, over to the coordinators. We can conclude this session. And I'm also happy to find that the participants have remained intact. We started with 100 and throughout the session we had 200 plus participants. So I'm glad the content has been received well, and I'll be glad to take the feedback as well. Thank you so much everyone for the patient hearing, and thanks to SIRC for having given me the opportunity as well. So coordinators, can we conclude the session?
Good evening, madam. Thank you very much for your elaborative session on the GST refunds. You have touched upon all the issues and all the notifications, circulars, especially on exports services, intermediary services, and finally, you have given the list of exception refund benefits also. And it is very useful for the members who participated for the refunds because of that the last date is the 30th November. And thank you very much, all the participants also. Thank you very much.